If you've never bought a home before, you can feel completely lost in the process. Purchasing a home for the first time might be difficult. After all, there are several processes, activities, and standards to consider, and you may be concerned about making a costly error. But first-time homebuyers benefit from several particular incentives to promote new participants into the real estate market. So, how are the newbies meant to break into the property market? The good news is that there are many resources available to first-time home purchasers, including support groups. The potential downsides are the number of obstacles and the difficulty in getting the funds. So, in today's financial video by Finance Aligned, we have outlined the procedure and gathered all the necessary information for first-time property buyers. Number 1. Finding a home. While looking for a home, use every resource at your disposal to identify properties for sale, including your real estate agent, internet listing search engines, and driving about communities of interest in search of for sale signs. You can send out some signals to your loved ones, coworkers, and business associates. You never know where a nice recommendation or lead for a property might come from. If you're truly looking to buy a house, never show up at an open house without an agent, or at the very least, be ready to give the name of someone you're apparently working with. It's clear why negotiating with the seller's agent first rather than your own agency may not be in your best interests. Look for houses whose full potential hasn't yet been fulfilled if you're on a tight budget. Even if you now lack the funds to replace the bathroom's awful artwork, you could be prepared to put up with it temporarily in order to move into a more affordable location. Don't let minor design flaws discourage you from purchasing a home if it meets your expectations in terms of important, hard-to-change factors like location and size. As a first-time home buyer, you should look for a home you can make improvements to, as this will guarantee a boost in equity to help you move up the housing ladder. Number 2. Before securing financing, think about your financing options. As a first-time home buyer, you can choose from a wide range of alternatives to help you buy a home, including those that are open to all buyers and backed by the Federal Housing Authority, as well as those designed specifically for beginners. In contrast to the typical 20% down payment, several first-time homebuyer programs provide minimal down payments as low as 3 to 5%, and some even don't require any down payment at all. Be sure to research or consider the following factors, though. The list of HUD resources. Although the governmental agency does not give money to people directly, it does give money to groups that have Internal Revenue Service, IRS, tax-exempt status in order to support first-time homeowners. HUD includes the FHA and its loan program. Consider your IRA. Every first-time homebuyer is eligible to withdraw up to $10,000 tax-free from their conventional or Roth individual retirement account, but they will still be subject to taxes if they use a traditional IRA. So a couple could take out a total of $20,000 to put toward the purchase of their first home. Just be aware that the funds will be subject to a 10% penalty if you don't use them to purchase the property within 120 days and you're under the age of 59. Additionally, the withdrawal will be subject to income taxes. Programs run by your state. For first-time homebuyers who meet certain requirements, most states provide financial aid with down payments, closing costs, as well as costs associated with renovating or improving a property. In most cases, a property's purchase price and income level are used to determine a participant's eligibility for these programs. Number 3. Get a mortgage pre-approval. One of the most essential actions for first-time homebuyers is requesting a lender's pre-approval for a mortgage. This is where you meet with a loan officer, ideally a few, at different mortgage providers. Each mortgage lender will carefully examine your financial history, looking at things like your assets and debt-to-income ratio, and use this information to decide whether to give you money and how much of a monthly payment you can actually afford. This will enable you to find houses within your budget. And that's a good thing because paying a purchase price that is out of your price range will make your mortgage payment difficult and increase the likelihood that you will default on your loan. But remember that mortgage pre-approval is distinct from mortgage pre-qualification as a buyer. When you pre-qualify, the process is substantially shorter, and you can get an idea of how much you can reasonably borrow without receiving any guarantees from the lender. Pre-approval is more difficult since you must submit a ton of paperwork, but it's worth it because it ensures that you are creditworthy and can actually purchase a property. As a home buyer, the one thing you may do to start figuring out what you can afford in terms of a monthly mortgage payment is to enter your information into an online home affordability calculator before you even meet with a lender. This will determine the highest monthly payment you're able to make. Number 4. Make an offer. Your real estate agent will give you advice on how much money to offer for the house as well as any stipulations you should include in your offer. The seller will either accept your offer or make a counteroffer once your agent presents it to the seller's agent. After then, you have the option of accepting or continuing to negotiate until you reach an agreement or decide to quit. Review your budget once again before submitting your bid. This time, take into account anticipated closing fees, which can range from 2 to 5% of the purchase price, as well as any necessary immediate repairs and essential appliances that must be installed before you can move in. Don't forget to account for hidden expenses like homeowners association dues, property taxes, house insurance, and home inspection where you examine your budget. If you come to an agreement, you'll put down a good faith deposit, after which escrow will be opened. An escrow is a brief period, typically around 30 days, which the seller removes the home from the market with the legally binding expectation that you would purchase it, assuming you don't discover any significant issues with it during your inspection. Number 5. Have the property inspected. Even if the house you want to buy seems perfect, you should still have a qualified professional do a home inspection to determine the quality, safety, and general condition of your potential new home. Avoid being forced to deal with a money pit or the difficulty of having to make numerous unanticipated repairs. You can typically withdraw your offer and receive your money back if the house inspection identifies significant flaws that the seller did not disclose. Also, as an alternative, you can request that the vendor lower the asking price or undertake the repairs. Number 6. Set up building insurance. How important is property insurance? In this case, you are obligated to purchase the property as soon as the contracts are exchanged. Let's say the building caught fire the day before it was supposed to be finished and you didn't have insurance. You would be responsible for paying the entire purchase price. So when you're considering insurance, you might also want to think about getting contents insurance to safeguard your possessions. Number 7. Head to closing or move on. You should be prepared to close if you can reach an agreement with the seller, or even better, if the inspection turned up with no major issues. In order to close, you simply have to sign a ton of documents quickly while hoping that nothing unexpected comes up. The home will need to be revalued as mortgage companies require this to protect their interest in the home. A title search will be performed to ensure that no one other than the seller has a claim to the property. Private mortgage insurance will be obtained, or a piggyback loan can be obtained if your down payment is less than 20%, and mortgage paperwork will need to be completed. The price of a credit report, title insurance, survey fees, taxes, and other closing expenses are examples of additional costs. You will have to review all of the paperwork you have already seen from your lender again before closing to ensure that your personal information is accurate and that the payment and interest rate they quoted you correspond to the figures in your documentation. Number 8. Move in. Are you done with closing? Received your loan? Congratulations! You are now a homeowner after successfully completing the property buying process. You see, the lengthy process of purchasing your first house wasn't as terrifying as you thought. It's now time to relax and take advantage of all the benefits of owning your own property. If you have any information gaps about home purchases, watching this video should help you fill them in. The less stressful the process will be, and the more likely you are to find the home you want at a price you can afford. Keep in mind that the more information you have about the process beforehand, after everything is said and done, you'll possess the satisfaction that comes from having successfully negotiated a major step in your life. That's it for today. I hope you enjoyed this video. Kindly let me know what you think about this video in the comment section below. Don't forget to like this video and subscribe to our channel for more educational content like this. See you next time. Thanks for watching.